Good afternoon, traders, and welcome to the Blue Line Metals Edge here for Monday, May 1st. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. If you're watching this on YouTube, be sure to like and subscribe. If you need additional information, go to our website, bluelinefutures.com. So I wanted to do one of these videos here because we kind of had a wild session in the metals markets. A lot of speculation as to what went on, especially when we saw silver up almost $1 on the day early on. So we did see that this news that came out that China's factory sector had contracted, and it put a lot of questioning behind the recovery, the reopening that they have. It was the first contraction since December. So what that does is it puts a lot of speculation that China may go and provide stimulus. If they put stimulus into the market, you're definitely going to see a risk-on type vibe, which is going to spill over. Copper will be up, which checked the box. Silver will be up, which checked the box. Equities were stronger. That checked that box. The dollar was weaker. Australian dollar goes up. Remember, one of China's biggest trading partners is Australia. Australian economy is very dependent on China. The thing that kind of was the red flag for me was that crude oil was down about $2. And I really think that crude oil would have been at least unchanged or reversed one positive on the day if there was any Chinese stimulus. So digging into the wood a little bit deeper here, you could see that it was actually a bank holiday in China. So they're not going to do any stimulus with then. And then you start looking at, other countries like Switzerland, Great Britain, Europe, all over South America. Everyone was closed. They got a Labor Day. So if you look at the calendar, it says that it's an early bank holiday and also May Labor Day, May Day in various countries. So I'd say 2/3 of the countries were out there that are relevant in the financial sector are not operational right now. So due to that kind of really threw me like this is going up on a light volume. So if you follow me on Kitco, I do write a weekly article on here, and I do post a chart that I'm watching, and the chart right here, I got a crossover pattern here, the 8-day exponential moving average, 34. It's one of the things that I use that I'm definitely, because it tends to trend pretty well. And you can throw a couple more filters on it and see if it's not that great of a signal. So one of the things I'm watching is this potential head and shoulders pattern. This is in a silver market that's developing today. It would have, if we could have closed here, and if we could have gone up higher, on the session, on tomorrow's session, then that would nullify that. We'd probably be a breakout. And if you're looking for a breakout strategy, we did find some value on the August 26.5, 28 call spreads. Not too expensive, kind of gets you that upside exposure, a lot of time on them. A market corrects from here. We got an easy risk management. We closed down below these levels. You just cut bait on that thing. Just get out of it here. But if we do get that follow through to the upside, we think it could easily be a double. So that's kind of what we're watching at on the silver. If you go to gold, and I really like TradingView because I put all my notes on the chart. Like the 2077 was the high, 1975 was the recent high. Here's that bullish pennant that we were looking at. It's right here. So if you look though, 1974, if we close below that level, it's going to take gold to a neutral trend. With the important thing of identifying trends and looking at certain breakout levels over durations of time is that when a trend goes from bullish to neutral, the trend followers that make up a lot of the funds and a lot of the managed money, they come out of that market. So, if you do see gold break below that level, we're probably going to go neutral trend. We'll start looking at a retracement for places to get back in. We'll keep an eye on this key double bottom here that was in place right around, it's in the 1800s, like 1835, depending on what chart you're looking at. Shows 1820 on this continuous one right here. So you'll keep an eye on that for risk management. You close below there, you're going to want to exit for the doors because chances are we're probably going back down to these levels, 1625, and that's not a good thing at all. So we are expecting, though, that gold prices are going to make a big move up. We think that they're targeting about 2,500 within the next 12 months. And if you, if you read one of my other articles that I put out, you look at the weekly, you go back, it's like right here, you go back to 2018, 2019. This is kind of what's going on right now. Remember the Fed starting May 2nd, 3rd, May 3rd, they're going to raise rates here on Wednesday. Supposed to raise rates 25 basis points. They indicated that they should have another 1 to 2 interest rate hikes. That was what happened right here. December 20th, 2018, they indicated 3 more rate hikes were going to come in around July. And what happened? They reversed course. They started cutting. They cut 3 times, which is what we think will happen into early next year. Gold goes on this incredible bull market, rallies from about 1250, 1300 on up to 2000. So I think being conservative, you could say that gold, if it repeats the process, goes from 2000 to 2500. So that's why we also find some value on August gold, 2050, 2150 call spreads. I wrote about those as well. It costs about 2400 bucks right now for one of those. So looking at platinum, little bit worrisome on the platinum. So you go to a daily on the platinum starting to break down. Oh, there's a lot going on in this chart. So keeping an eye on this one trend line that's going up right here. That's kind of your speed line. You're going to have to start watching, see if they resolved any of those issues in South Africa with regards to the mining. Remember, we've got this supply-demand imbalance that's going on at the moment. We're going to want to keep an eye on that, see if it's still intact. If that's the case, we might just bounce off here and keep going up. So keep an eye on that. Copper is one that I like. Copper, I think you got this like embedded upside call option, because if China does acknowledge and says, hey, there's more to do, we need to provide some stimulus and things like that. You already saw Bank of Japan, they reversed, they're not hawkish, they're turning dovish again. So that's why the Japanese yen fell out. But I think that, copper, I think we could easily go on up. We could be at, if we start using China, if we get that stimulus, Fed cuts rates, we'd be right back at 425, 450. So looking at the yen here, you can see that's that chart. That's where they announced that they're going to be more dovish, less hawkish. And then we got the follow through today. So you want to keep an eye on this level below. But that's about it. Dollar strengthened a bit. Another lighter volume day. You could extend this trend line out. You can see that we bounced off. It goes up here from the top, connects here on this one, and then right here. So we'll see if it ever breaks through there. If it does, I think that breakout to the upside will be short-lived, because they're going to turn dovish on the Fed will. They'll start cutting rates, things like that. We get the tailwind behind the risk assets. So I just want to put out a quick video for you guys. You got any questions, give us a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.